episode 7. So obviously I'm not yet retired because I'm on my way to work. I'm driving to work, but part of this road to retirement is these series of videos that I will leave to my children of how I basically retired, because I don't believe all my children are thinking about that yet. But the earlier they start investing, the better they are. But I can't force them to do something that they don't want to do. Eventually, someday, they'll probably decide to invest or do something, or trade or whatever, buy real estate. So I'm just making these videos partially also for my family, leaving something to them. So, episode 7. My topic right now is more of Q&A, questions that I got from people and my followers. Now, I don't consider myself like a super influencer here, but I do have some following. I do have people asking me questions occasionally on the Blossom network. So even with the small amount of following I have, I do have some questions. Some are more personal, how you get started, what are you doing, where you're from, whatever. But there were 2 that were specifically about asking about trading and investing and what is the difference. One is from Leona, one is from Noah. And Leona asked, "Hi, this is a bit random, but I remember seeing your comments on my posts when you mentioned you were a trader. I have to say, I'm intrigued by how trading works. Do you have any advice where I should start? And if I wanted to learn about trading, where should I start if I learn about trading?" Now from Noah, "Hi Benj, I had just had another question. What is the main difference between investing in stocks and trading stocks? Are there any particular videos I should watch that I recommend? Thanks." So yeah, these questions came in from the Blossom Network. I have a QR code there if you want to join Blossom Network. It's an awesome network if you join that. It's like social media for stock investors and stock traders. But aside from just sharing, our portfolios are shared. Our actual holdings are shared. So you know what people are individually invested in. And from there, you could see the transparency, of their trading systems. Are they really doing what they're saying? Now, in Blossom, you connect your brokerages. It's connected by the API. Basically, the link between your brokerages and your Blossom network. So, if you have the verified badge, your followers could see that you are really buying and selling the stocks or ETFs that you bought and sold. Okay, so anyway, that is basically Blossom. Some followers are here on the platform, and they ask these questions. And like any other video I have, I start off with talking about the performance. So, performance of my portfolio overall. And my 401k account is still there at the, I haven't reached the 100k mark. However, it's closely getting there. I did say in some of my earlier videos, most likely by the end of the year, I'll get there. Now I anticipated even before that, maybe in the middle of, we're near the middle. Yeah, by the end of the year, correct. We'll get that 100k. And then my stock brokerage account, in my last video in episode 6, I wasn't yet at the 50k mark, but now I am at the 50k mark. In fact, it's around 58 right now. So that was my goal for 2026. But now I'm already at 50k. So of course my new goal is 60k. But let's see how far we could get before 2026 ends. And we're near that halfway mark already. Annual dividends is still at the same place, didn't change there. Total stock portfolio also the same. That 250 is a bit far away, and rental income from or revenue, not necessarily income, from rental property is also at the same mark. Other things that change are the percent change month over month and year over year. That 5.7 and 24.38. So that is currently 7.17 and 30.68. So those have also changed, also higher, and we'll continue to monitor that moving on. If ever I'm going to come up with estimated amounts by a manual line drawing it, so around 88,000 for the 401k, that stock brokerage is around 58. So those are my estimated areas. On this next slide, I don't have this in my other videos except the last one, episode 6, because my episode 6 video was specifically about trading systems. And but in the trading systems, I laid out the performance of them. I stated how these trading systems are performing, how many days they have been running, and how much percent gains they had since the day they started running. These trading systems are like algorithmic trading systems, meaning it's rules based. It's rules based. You give rules when to buy, when to sell. You give rules what to buy, and it's almost like the rules decide things for you, and you just have to follow them, either automatically or you do it yourself. As long as the rules, as long as you follow them basically and take all emotions out. Now, all of these are based on trading systems. I would say the only thing that is close to investing is the DCA index funds that you'll see here. But this was a screenshot from the last presentation. The current one, when I updated it by the end of May, we're now in the beginning of June. I'm supposed to upload this in May, but in the end of May, all of these improved. And in my previous video, the Premier Growth Trading System actually was around 80% improvement, and now it's 173. So that's way than double. Now, not everything improved though. You could see the LEAP covered call, the LEAP CC, and the dividend stocks in the US. It's a trading system that involves stocks with dividends. They decrease compared to the previous month, or my previous episode. But the percent gains are still in the positive. But not everything always goes up. You can see 2 in the red there, the index protective puts, and also the bottom fishing. Those are red, and there's no arrow up or down because they didn't change, because I don't do them. I only do the index protective puts when the market is going down, and the market's not going down, so I'm not doing that. The bottom fishing in rising industries, I only do that at the bottom of the market, the lower of a downward trend, just where I anticipate it to turn back up. Where there's strategies for that. And since we're not in that situation, I'm also not doing that. And I was experimenting on those systems, and you can see they're both in the negative. So maybe I still have to learn how to do that. But since they have been happening less, there's also less time to practice that in those types of situations. So anyway, that is just my updates on my portfolio before I go straight back into the topic again. But before I go straight back into the topic, of course, the disclaimer, this is for educational purposes, training purposes, entertainment purposes. This is not financial advice. I'm not financial advisor. I'm not responsible for any losses you have in trading or investing. Always consult your own financial advisor. Do your own research, and past performance does not equal future success. So just wanted to share that, and yeah, we'll continue. So these are the questions we wanted to answer. And let's go straight into it. Investing versus trading. And I have an outline here of what I'm going to go through, you know, the primary goal, the time horizon, stock selection, and so on. So let's start off with the first one, the primary goal. So the investing is to, you know, build on long-term wealth. What you're doing here is you want to benefit on the company's growth. So typically you invest in, you know, well-known large companies, no fishy companies, no small penny stock companies. You could also earn from dividends to help that compound, because if you reinvest the dividends, that it increases what you're investing in, and then you could, you know, increase the rate of how it grows, how your portfolio grows. Now, in trading, you're basically generating income or capital gains. Sounds kind of similar. You still earn money investing in trading, but you profit more from the price movement, and you're taking advantage of market trends and volatility. So if the market trends makes values of stocks go up and down, which is how volatile they are, that's what you want to take advantage of, because you're basically buying small and buying low and selling high. And sometimes in trading you could also sell high before you buy low. And then it's also complicated as well when you go into option trading, which is totally a different thing. But in essence, you're buying and selling and trying to make a profit from there. And you're not thinking long term. Which goes into the next difference, the time horizon. See, in investing, you usually buy a stock and hold it for years or decades. It's probably the lifetime of your portfolio. You just put your money in there. A lot of people like doing that to index funds because it's, you know, stable, or, you know, blue chip stocks, you know, because they're reputable, they're known to grow over time. And basically there's a tendency where investors will hold that for a long time, no matter what the market is doing. The market is going up or going down, you still hold it, basically, is what many investors do. While in trading, you own a stock at different periods. Sometimes it could be minutes, hours, days, weeks, or even months. And basically positions that you own, you know, they frequently you open or close. And open means you buy them, and then you close them when you sell them. Okay, so you could see that you're never owning a stock for a very long time. Now, another difference is on the stock selection. The main question you're trying to answer is, in investing, is this a great company? Because if you're, you know, if it's a great company, then most likely if they're a great company makes money, and if they're making money, then you're making money in the long term. But when it comes to trading, the question is not really if the company is great. It's more of, is this a good opportunity right now? Because sometimes the company is not great. You can see the movement is really going up. It's surging. It's going fast. It's growing. You buy at the right time, and when it starts to slow down, before it goes down, you sell, and you're out. You still make money, and the company may be good, may not be good. They're all different. So, but oftentimes they could also be the same. Some stocks or ETFs you buy are good in trading, that are also good investments. But it's the main question you ask. They're different. So when it comes to the analysis, you know, in investing, it's primarily fundamental analysis, because that's what tells you if a company is actually great. You're checking their revenue growth, you're checking their earnings, you know, competitive advantage of this company. What do they have that competitors don't have? Management quality, you know, who's the CEO, who's these people that own it, who's these people that run it. yeah, the management who runs the company, and then valuation. What is the value of that company according to analysts? Well, how much dividends do they give out? How much will you gain over time so that could compound? And then in technical analysis, that's more for the traders. They're looking at the price action, the movement of it. They're staring at the charts. They're looking at technical indicators, the volume, how much people are actually trading, and what is the momentum? Is it really at a steep climb or just a gradual climb in price? And those are the things that traders look at before they do participate in the trade, before they open a position. So that is from the focus. Now, when it comes to the activities, investors, they're really good at researching about the company. They buy quality businesses, and whenever dividends come in, they reinvest it to help in that compounding. And typically, they hold through the volatility. Whether the price goes up and down, whether you're earning money or not earning money. Sometimes it may look like, oh, I'm losing money, but they stick with it because in general, it's still going up. So that's why they hold on to that further. Now, when it comes to trading, the activities you typically do is basically you scan. You scan. When you say you scan, it's almost like you're searching for stocks based on certain parameters. You give the parameters, you give the indicators, so that you could find the stock that is ideal at the time you're going to buy a stock. So you make the right purchase based on the indicators that you're looking at. So when you do trading, part of these activities is basically the enter and exit positions. You know when you're gonna actually buy something, and you know exactly when you're gonna sell something. It's already pre-planned, so that you don't have to rely on your emotions to make that. You just rely on your planning rules and just stick to it, and that's when you buy and when you sell. You'll have methods to manage your risk because you don't want to lose money, and you're not really predicting. You're following the market. You're not predicting the direction because no one could actually predict it. So you're finding ways to manage your risk, and usually that is done by part of the planning of your exits. When you exit, you want to minimize risk, which is the next bullet point. You set your stop losses. Once a price reaches a certain price, once the price of a stock or ETF reaches a certain low price, if you're long or you're betting on the upward movement, then it would exit that position to avoid any further loss. Typically, you would monitor the markets more regularly than in investing. So, in the number of decisions, in investing, there's typically fewer decisions. You buy it, you hold it. The only decision you did there is what are you going to buy? And once you decide on that, you continuously just invest in that. You hold it long term. Whereas when we're talking about trading, there's a lot of things you need to decide on. They're all different. So you need to think about the entry price. You have to think about the exit price. Your stop setting. When are you going to stop? When it's going to automatically sell once it reaches this low price. Position size. How many am I going to buy? And then if you need to make any adjustments as the market moves, if it starts going in a different direction than what you wanted, do you want to exit earlier? Or if it's going way faster upward that it doesn't look like it's gonna stop the climbing momentum yet, maybe I don't want to exit yet. Maybe I want to take a larger profit. You make those decisions. As long as it's still rules based and it's not based on gut feeling and emotion, that is basically what you do in your trading. Now, everything you do, there's risk. Everyone could make mistakes, and you could also lose money. But how could you lose money? What are the risks involved? So when it comes to investing, it's basically choosing a poor business. I would say people that understand financial statements better have a more advantage of this, and people that don't but rely on stories that was said by a friend, co-worker, whoever, an acquaintance, you were sold on it in some way. Oh, this company is going to grow. You know what? Because whatever the story is. And if you buy into that, that could, be a source of risk if you're not really analyzing their financial statements. And then overpaying for stocks, that could also be a risk, because even though in investing, you're not paying attention to timing, but timing does help to enter at a lower price. Sometimes if you enter at a higher price, and the trends of some of these stocks are longer, and sometimes you'll lose a lot of money before you start earning them, and it just hurts your portfolio. It's almost like losing time where you could have earned more money if you just entered at a different time or entered at a different stock during that time. And then lack of diversification. So not all companies will move in the same direction. Some of them are seasonal, but all of them grow basically. Let's say great companies, all of them are growing, but all of them will have some down period. And when you diversify them, their down periods will not be all at the same time, which is why you want to diversify. Ideally, you get different stocks from different industries, so their seasons are not that much related. So you avoid the down periods. If you put all your eggs in one basket and it's during that down period, then you're losing money. While if you diversify in multiple stocks during that down period, some of them are making more, and the more diversified you are, typically you minimize that risk. In trading is poor timing. So, it's easy to say buy low, sell high. But to actually do that, the price constantly moving, it's not always that easy. And sometimes you'll notice when you set up these trades, sometimes they don't go through. And as long as if your timing is off, then you're losing money basically. Another one is emotional decisions. I think there is a big research about traders. You could go and just Google it. Ask ChatGPT for the source of some of this research, where most of the losses from stock trading were all based on emotional decisions, in most cases for people that lose money trading. And then another risk is over trading. Sometimes you don't need to trade, but you're forcing yourself to trade because you feel you need to do something. There are hold positions and there are cash positions. Hold positions are, you're just holding the stock, you intend to sell it, but you're holding it because that is what's best for that period of time. There's also cash positions, meaning you sold everything, you don't own any stock or ETF, and you're just holding on to cash. But you're waiting on the right time when to buy. And sometimes the source of risk is thinking I need to do something when you don't. And then inadequate risk management. So all my trades, all the positions I currently own, so those that are members of Blossom, that see the stocks that I currently own, all of them already have exit. They have stop settings. They will all exit on their own when it's time to exit them. And that's my risk management. They actually all have trading stops. All of them, if they go down a certain percent, and they're all different for my stocks, they're not all the same percent, they exit automatically. So if ever everything goes down I do lose a little bit, but I don't lose a lot. It's not like it's zero loss. It's a small loss compared to a big loss. So that is basically what I have. So what are the skills required? In investing, you have to be patient. Basically, you should be good at analyzing businesses, and your thinking should be for long term. Because if you see, downward price movement, it does not faze you. You're not even, nervous about it because you're still thinking for the long term. When it comes to trading, it's all about the discipline. Don't give in to your feelings. Follow your rules. Discipline to follow your rules. And then you should have risk management all the time because you want to avoid losses. You could control your emotions. You don't give in to your gut feel. And what needs to be consistent is your process. Set your rules, test them, back test them, and then follow them, implement them. Now, probably related videos to this, I have an earlier episode about my principles in swing trading. You could take a look at that because that also talks about some of the skills required. Yeah, so that's that. I'll probably provide a link to that video where that should be. Now, why some like trading more? Like me, I like trading more than investing. So first is, I want to be flexible when I could use my money, where I could use it occasionally or regularly. In investing, you're relying on the compounding. You're relying on your money to stay in the position for a long time. Once you take it out, you're losing on that strategy. So how the long-term investor works, again, from the word alone, long-term, you keep your money there. But if your money's there, how could you spend it? And if you want a little bit of flexibility to decide when you spend, that's why I am a trader. However, I do have a small percent in my portfolio that I'm now doing investing positions as well, long-term investing. But I also have my majority of it is my trading, which I control the money where they come and come out. And then there are a point where they are outpacing the market. They are at a point, I mean. So people that like trading more is because their trading is now outpacing the market. In my episode 6 video, I talk about that as well. I'll also provide a link going to that. And then last bullet point here, it aligns with their skill and temperament. Yeah, I would consider myself a more technical person. I'm not that business analyst savvy. Even in my current, past work and current work, I'm not a follower of geopolitics. I'm not a follower of business news, economic news. I'm not even good in those subjects when I was in school. My degree, I came out from a chemistry degree, and then I turned into an IT professional, and then I do web design, web development, and then I'm more of a developer. I went into SEO, particularly strong in the technical SEO part, and then I turned into a data analyst for some time. So analytics and stuff like that. I've been leaning towards learning more about data science, and that is my nature. So the technical skills and technical analysis seems to align more with me. While people that understands businesses more, they could analyze, if you're making money or not. They know how to look at financial statements. They understand the economy well, and they know how the macroeconomics affects, down the line in different businesses. Those people that are good at that, maybe they're better as investors. So that's why they prefer investing. All of these technical indicators and technical analysis, sometimes it's difficult for others. And because of that difficulty, they just lose money trading instead of earn money. So why do some That's my initial link, my current trading systems, my previous video. I go through my portfolio and the algorithmic trading systems I'm running, and I show how some of them are done, or their rules, and how they're performing. Now, I also have another video that you could check out, why I swing trade versus everyone else, because there are a lot of people that don't like swing trading. Although I'm also a position trader, I'm not only a swing trader, but I came up with that video why I primarily trade than I invest, and I go deeper into that. I give all the reasons why, and I show even in how I earn. Why do I earn larger trading? Well, not necessarily larger, but I'm outpacing the S&P and all the other markets by doing trading. So that is that. Now, why some like to invest more? Because they lack the time to trade. Because in trading you have to be somewhat active. And in my case, I did mention earlier, I'm a swing trader, position trader. I'll never be a good day trader. I'm not going to be a day trader. I'm not going to be basically a day trader. I'm a swing trader and I'm a position trader because it gives me more time. I don't have enough time to also stare at the market. Well, when you're an investor, you're really, you could even not look at it. You believe so much in the company, it's a good company, you just leave your money there. So another thing is investors think timing the market is hard, and they prefer spending time in the market. And you'll hear that term in many investors, where time in the market is better than timing the market, because timing the market is hard. If timing the market is hard, and that's the reason why investors are doing it, why do I do it? Am I good at timing the market? Not necessarily. I rely on tools, I rely on software, I rely on charts and indicators, where the more you learn it, the more you get your timing right. So, but in general, if you don't get those indicators, you don't have a system that don't have rules that you've tested and back tested, then just trying to rely on like a gut feel, timing the market is hard. So investors prefer not to do that and just spend time in the market. And then again, it aligns with their skills and temperament. I did mention it earlier. If you're a financial analyst, economist, even an accountant will have better understanding of financial statements. They'll know if a stock is performing well or not. So yeah, that's basically that. And that ends it. Thank you very much, Benj, Arriola, Road to Retirement. Now, I do know that swing trading and position trading, it could be hard sometimes. I did say you have to be more technical, and I rely on tools, software. I also rely on vector vests, and in this software, if you intend to use it, you could use my link in the description or the QR code that I'll display in my video, where you'll get a discount trial offer if you decide to use Vector Vest that way. Vector Vest is what helps me in my swing trading and position trading, and it makes it a lot more easier, because a lot of these rules in my trading are automated within the system. So yeah, just want to share that. And I'm not forcing everyone to become a trader. If you're really good at investing, then and you don't do well in trading, then more power to your investing. If you're good at trading and you're not happy in investing because you wanna earn quicker than a long-term investor, it is possible. But if you're just starting out, expect that you're not gonna have that early. Most likely there's some learning curve where you're gonna lose a little bit before you outpace the market. And I have a story of that in my episode 6. So